Hello and welcome to the lecture for part 2 of chapter 12. This will be fairly brief. There's actually only 2 slides in the lecture. I'll spend a bit more time working through some sample problems, so I'll post some video practice as well. I found the best way to really learn how to do cash flow statements is to actually do them rather than talk about them. So that's why this is a little bit shorter. So we talked in the last lecture about how to do the first section of the statement of cash flows, the operating section, which is the most challenging really. So you did a homework problem on that, and I did a video practice on that as well. So now we're going to talk about the next 2 sections and then how to wrap it all up. So in the investing section, remember that deals with the sale of non-current assets. So did we sell equipment? Did we buy a building? Did we buy land or sell land? So I'll look to the general ledger detail for that information. The reason I need to look at the general ledger detail is if I just look at the beginning and ending balance sheets, I could have, as an example, bought a $100,000 building and sold a $60,000 building, so it looks like a $40,000 increase, but really there was a use and a source of cash there that would both be reported. So I wouldn't know that just by looking at the ending balances. I would need some more detail for that. So that's for the investing section. That's going to be cash inflows when I sold something, and I'm going to record as a cash inflow what I received in cash for selling that. And the outflow would be the amount I spend for buying that. Again, those are all for long-term assets. When it comes to the financing section, I'm going to look at long-term liabilities, and I'm going to look at equity to see where did I receive cash. I would receive cash from either borrowing money from a bank, so a note payable increasing or a mortgage payable increasing. I would receive cash in equity for issuing stock, so common stock and paid-in capital in excess would both increase if I issued stock. And then uses of money. So uses of money or uses of cash in those examples would be paying down debt. In the equity section, it would be buying back stock or paying dividends to shareholders. So I would look to the general ledger details for all of those activities. So now for an overall statement of cash flows, you'll see how this works. There are the 3 sections there: cash flows from operating activities, and we have all the detail, jump down cash flows from investing, and then cash flows from financing. Those 3 different categories are going to add up to an increase or decrease in cash. So let's look at them. We talked in the last lecture about cash flows from operating activities. I start with net income. I adjust it for non-cash expenses like depreciation, and I subtract out the gain on the sale of land because that's going to be accounted for down in the investing activities. I can't have it in 2 places, so I subtract it out of the upper part there. And then I've got changes in current operating assets and liabilities, increases and decreases in current assets and current liabilities. Remember to do that little matrix I showed you for how to figure out what's having a positive impact on cash, what has a negative impact on cash. So in this, and this is a carry forward to the previous example, is we have cash flows from operating activities of $100,500. Next, we have cash flows from investing activities. So I have cash received from selling land, that's $72,000. I have cash paid to purchase new land of $15,000 and cash paid to purchase a building of $60,000. So I had net cash paid out of $75,000. So I have net cash flow used for investing activities of negative $3,000. I used more cash than I received in that area. Next, I have cash flows from financing activities. So here I have cash received from issuing common stock, $48,000. I have cash paid to retire bonds, so pay down debt, and I have cash paid for dividends, money that I paid out to my equity holders. So I used $74,000 and I received $48,000. So I had net cash flow used for financing activities of $26,000. I had more cash flowing out in that area than I did have cash coming in. So I can add those 3 numbers together, 100,500 minus 3,000 minus 26,000. So I have a net increase in cash of 71,500 because it's a positive number. I can go back to my balance sheets and I could look at what was the cash at the beginning of the year. It was 26,000. So I should be able to add my increase to that cash at the beginning of the year and get 97,500. Then I can go check my ending balance sheet and I should have cash of 97,500. If you do everything right, that will work every time. So it's kind of one of those self-checking kind of statements, which is nice about accounting. So that's the end of the walkthrough or the video lecture here for chapter 12. And as I mentioned, I'll take a little bit more time and post a more involved video for the practice for doing your first statement of cash flows. And we're going to have a couple of homework assignments on this. So you'll get it when we're done, I promise. Thanks a lot.